Okay, it's Brent and Mike again with a chart breakdown for trade therapy. We are it's Tuesday, September 17th. We are looking at Meta. We supporting last week's Clarity Spotlight on Meta. What we're looking at right now is our chart from October of 2022. You can see we were targeting this area right here after watching this big breakdown of a price structure here. We were looking at this and thinking this looks like redistribution. It kind of is starting to form what looks like accumulation, but then this real sharp spring move that developed in October of 2022. And you can see that here's the gap down when it actually undercuts our range slightly. It got down to about 93, I believe. But you can see the big spike in volume here as it gapped down and set up what developed into a hypodermic accumulation structure, which is this move right here. You can see how far it got down. There's the green circle, our target. It's still there because this is the same chart.
Mm.
There is our target there. So it went right around us, right below us, and then came back up and went right through us. What happened was on this sharp hypodermic spring move right here. See this massive volume, big volume pulled in here and bought the low right there.
Mm-hmm.
And then we see this huge run up. This is called a lockout rally. So back in October of 2022, Mike, I'm sure you remember all of the negative headlines that were going out. Everyone was talking about deep recession. Everyone was talking about how inflation was completely out of control. We were headed to the 1970s again, with Volcker raising interest rates all the way up to 15 and 16%. What really happened was it was a buying opportunity here in Meta. It turned around and broke out and ran right up into, really did not slow down until it got to a 786 retracement of the full post-COVID correction. Didn't slow down till it got up to the 786. You can see that it never really even came close to back testing the 30-week simple moving average. It jumped across the creek here and never really came back and back tested it. And so this is an example of, in a lot of the trade therapy content, we write about how institutions really don't want retail investors involved in their trades until they're ready to take profits. This is an example of that here, where they had a big campaign here to push prices down and take advantage of what was probably the most negative or bearish sentiment in the marketplace that we've seen probably since the great financial crisis. So they moved in, bought it up, and then ran it up with a markup campaign. Really didn't even slow down until the 786. And then even then, it just very briefly tapped up with the 30-week simple moving average and then went on another extension and markup campaign here before it has hit reaccumulation. Meta is in a very similar position. We were just talking about SPY a minute ago. Meta is in a very similar position to the S&P 500 and the rest of the Mag 7. You do see some bearish divergence has developed. Good example of bullish divergence back in the bottoming process. We do focus on and talk about in trade therapy content that the longevity of the divergence is directly related to the strength of the corresponding action. So short term, we believe Meta is probably going to see some sort of an uptick related to the rate cuts we're expecting in the morning. We do think that there's a chance going into October to see an October low that would undercut this entire range and form a Wyckoff spring action. We believe that will then start off and kick off what for Meta will be wave 3. We have this as wave 1, 2, and 3, beginning the larger wave 3 structure for Meta. Hope that was helpful and hope everyone's enjoying the Clarity coverage on Meta this week.